You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. I won't list all the programs for you here. Most of you have already checked them out, and if you haven't, the easiest way to find all of them, in addition to just going to the OptionsInsider.com or searching for Options Insider Radio Network in iTunes or wherever you find your podcast, is, of course, to download our mobile app available for iOS, Android, and indeed Fire OS, all three of the big ones. If you rock BlackBerry out there, let us know. Maybe we'll make a version for all three of you guys out there too. But of course, on the app, you can instantly stream all 300 plus episodes of the Option Block from pretty much wherever you have a signal. You can listen to the show, and then you can download it for offline listening. You're heading off on a plane or on a train somewhere. You want to queue up a few shows while you're on the trip. The app is the easiest way to do that. And of course, while you're listening, you hit that email, you hit that feedback button. You could shoot us an email, shoot us a question or a comment via Twitter, via Facebook, even leave us a voicemail, however you want to do it. It's all baked right in to the app there. Really cool stuff. Check it out, the Options Insider Radio Network app, available for iOS, Android, and indeed the Fire OS. All right, and joining me on the old program today, starting off with the man holding down the Options Express by Charles Schwab hot seat, none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the show, sir.
Hey, Mark. Good to be here today. When I titled the afternoon blog, VIX takes out 11, I knew it wouldn't hold 11. So, quiet day. VIX was up a little bit. But the exciting news is Lulu is back on Deal Talk.
I saw you Facebooking about Lulu there. I know you're pretty excited about Lulu, so perhaps we can get into that in a little bit in the trading block. But first, let me introduce one of our other esteemed all-star panelists, none other than the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
Always a pleasure. Always a pleasure to be here on the Option Insider Radio Network. Mr. Longo.
It is a very pleasurable place, is it not?
I would argue one of the more pleasurable places to do an option show. The greeting is always fine here. Always fine.
You know, maybe that just needs to be our new tagline, the most pleasurable place for options radio. I'm not sure if that's going to have the same resonance, but we'll check it out. And we hope to be joined a little bit later, listeners, by Uncle Mike Tosaw. He was engaged in some other matters, but going to join us as soon as he's free. In the meantime, rather than wait for him, we're just going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, you know what that sound means. It's time once again for the Trading Block, the portion of the show where we break down what's hot, what's lighting up our collective tapes, what are we watching from an options perspective as well as from a broad market perspective. And as Alex alluded to at the top of the show, from a broad index perspective, it wasn't a whole heck of a lot going on. Most of the major indices essentially unched on the day. Everyone's busy watching the World Cup around the globe. No one's really trading these days. And, of course, the VIX cash ticking up a wee bit, a smidgen, a hair, if you will, to close just shy of the 11 handle, 10.97. As we record this today, listeners, Monday, June 23rd, for those of you playing the home game. So, Alex, perhaps we'll start with you. You mentioned the VIX cash catching your eye, and, of course, Lulu. Let's dive into those a little bit.
So there were three names that really kind of kept us busy here at OX today. Lulu on Deal Talk, which is interesting because if you go back a year, we were doing here at OX Lulu volume close to some of the bigger names. It wasn't quite Apple volume, but we did a lot of volume in Lulu, and it kind of became a living dead stock. And, 2 weeks ago they missed earnings, and now they're up $5 off that low. And this weekend the story broke that there is a discussion about the founder bringing in a VC firm or bringing in a private equity firm and maybe taking the company private. So it popped a bit today. Two other names that were active today were Facebook, trading back over $65, and Tesla, sort of the perennial hot-cold stock here at OX. And when it gets hot, it really gets hot. And Tesla having a really good day today.
Interesting points there. Mr. Viceroy, as usual, I'm looking here at the numbers for Lulu while we're talking, and you're right, at closing today, up about $1 and change to 41 and a quarter, that's about 2.5% today, and it's been averaging of late. You're right, slightly lower ADV, about 23,000 and some change here a day, which is off the record highs of the Lulu of old. When you're right, it was very much a stealth Apple in many regards, but doing a little bit strong, a little bit decent volume today, doing about nearly 30,000 contracts today off of this move. So another one we'll keep an eye on. Facebook, again, the perennial favorite. It's on, it's off, it's hot, it's cold, like a lot of these other names. But Tesla, you're right, really lighting up the old tape today, up another 7.5 handles or 3.3% to close at 237 and a quarter. So just the nonstop run, the bulls just cannot be dissuaded out there in Tesla land. Doesn't matter what it is. They're building a plant. They're giving away their patents, which you think would be perhaps a bearish step for a particular company. Doesn't matter what it is. If they're in the headlines, this stock is rallying. The bears just can't get any traction out here in Tesla land. Mr. Rock Lobster, any of these three names come up prominently in your chat today?
Facebook, we didn't chat on Facebook. We have avoided Tesla. I can't quite figure out what the latest rally is. Maybe there seems to be a lot of hype for both the Elon Musk stocks on, when his new gigafactories are going to kick in here, or where. I still haven't figured out where he's going to get the money to build them, but I'm going to leave that to him because he's a much smarter guy than I am, apparently. Lulu, I think this feels like kind of the fate of the century. It's still not an inexpensive stock, even at $41 a share. So, I guess somebody could buy them out, but, we didn't know. We were actually a little more interested in First Solar and some of the action going on and all the natural gas limited partnerships that seem to be sort of bouncing up here for no real reason. So, but that was really what we looked at mostly today, and obviously the volatility products crumbling a little more. So, but we did not get those hot button items, so to speak.
Since we're talking about Tesla here, maybe I'll do a little preview of the old Xpress Block. I was just digging in to one of my favorite tools here on the OLX platform, of course, the old trading patterns tool, where we dig up what else people on the OX platform are trading when they're trading Tesla. We haven't done this in a while. Maybe we'll do a quick here at the top of the show, trading patterns guessing game. Since you were just talking about Tesla, we'll start with you, Andrew, here. What would you say is the number one underlying that people on the OX platform who are trading Tesla are also trading?
SCTY.
That would be a good guess, but number 7, no. You're looking for too deep of a correlation, too deep of a causality, sir. Go a little bit more superficial, go a little bit more retail-friendly. Alex, the next guess will be yours.
I'm going to guess Baidu.
Baidu, another interesting guess, and actually nowhere near the top 10 here. So you get another guess, Mr. Viceroy.
Amazon.
Yes, a good guess. Number 5, to be precise. So far we have 5 and 7, Amazon and Solar City, and you guys really haven't guessed the number one name. And I'm seeing something in the chat here, which may be up the alley of our final member here of the old All-Star panel today. None other than Uncle Mike Tosaw. Uncle Mike, welcome to the show, sir.
Always happy to be here, especially when we're playing the guessing game. This is one of my favorites.
So since you just came on and you are a devotee of this name, go ahead and guess it.
Apple.
Yes, Apple is indeed the number one correlated underlying to Tesla traders on the old OX platform. Read into that what you will. Perhaps they're both a little hype heavy, very retail friendly. So I guess you can probably intuit then, Uncle Mike, what the number 2 name would be. If you didn't hear, we already guessed Amazon number 5 and Solar City was number 7.
Amazon number 5, Solar City number 7. See, I would say Baidu. I'll be honest, I would say Baidu, but since I already know that that's not the one, I'll go with Facebook then.
Yeah, once you know Apple's on the top, you know Facebook can't be too far from the list. Tesla, Apple, Facebook, kind of like the trifecta there of hype-heavy, retail-heavy type names. Number 3 is an interesting one. Andrew, this one may surprise you and or alarm you.
I'm going to say CMG.
Why would you be alarmed by tasty, delicious burritos? No, sir.
I thought he was going to say Zynga.
Yeah, Zynga would have been a good choice, but perhaps even more alarming to you and something perhaps even closer to your wheelhouse, Andrew. Try again. Number 3.
Oh, VIX?
Close. VXX. Number 3.
VXX.
Yeah. So number 3, VXX, which I guess when talking underlying, that's pretty much the only name you can throw in there. So yes, VXX number 3. I guess that would be the honorable mention in the trifecta of overhyped underlyings. And then number 4, if you guys are on this realm now, you know probably number 4 is going to be. Number 5 is Amazon. What falls in with the Facebooks and the Amazons of the world?
Google.
Twitter.
Yeah, there you go, Alex. Twitter, yes. Number 4 is Twitter. And then I'll just run down the rest here. 5, Amazon. 6, Yelp. 7, Solar City. 8, The Widowmaker, Netflix. And then a couple of weird ones coming in at the end. Green Mountain, a perennial favorite over there at OX. It seems like no matter what people are trading, they're always slinging a little bit of Green Mountain on the side. And number 10, Accolon Pharmaceuticals. I don't even know which one that is.
No Priceline.
No Priceline, no Google. So a couple of obvious names off the list, but for the most part, pretty much what you'd expect over there in Tesla OX land. Uncle Mike, before we rotate out of the old trading block, why don't you tell us how was the BBI today, 1, and B, what were you up to over there at RCM Wealth Advisors today from an options perspective?
Just closing out some things from last week for the most part. We actually do have a small position, a spec collar type of play with which we have on Triple D. Not a huge fan of it for the long term personally, but it's one of those ones where we put on a lot of long premium on it, so kind of an enhanced collar type play. We took some positions off of that today. And other than that, I did the toothpick trade, trying to put toothpicks under my eyelids to stay awake throughout the day today.
So what qualifies as an enhanced collar? Is that a collar with an extra put kicker? Is that where you're working some of the near-term time spreads to pay for it? What's the enhanced collar?
This was a near-term position, or this was a very small position with a speculative nature to it, and we will discuss this in the strategy block.
Ooh, a tease. It's like you've been doing a radio show for a while or something.
Yes.
Interesting. All right then, listeners. We don't want to keep you waiting any longer, listeners, so we'll keep on rolling with the show so we can get to that strategy block even faster. But first, it's time to dive right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you know what that funky tune means. It's time once again for the old Odd Block, the portion of the show where we break down what was weird, interesting, or just downright unusual that caught our eye out here in the day that was from an options trading perspective. Again, if you want to play the home game, follow along, get much more detail on these alerts or just the alerts we don't have time to read, then by all means, surf on over to theoptionsinsider.com. Click on that unusual activity tab. A lot of great stuff. We just don't have time. We can pretty much do a whole show just on this stuff. Who knows? Maybe, Andrew, perhaps we will down the road. But first, let's kick things off in the old Odd Block with some interesting activity. You know, we're always talking about upside calls, occasionally some downside puts, occasionally the two are married with some risk reversals or some collars. But we don't see a lot of this type of trade going up in the old Odd Block, which makes it interesting in and of itself. I'm talking about some put flies. We haven't really, I don't know if we've ever profiled those going up in the Odd Block before. In particular, we saw some put flies going up today in DJX. That is, of course, the Dow Jones Industrials ETF closed today 169.37, so a smidge under 170. This is the name that does about 2,800 contracts a day, doing a whopping nearly 17,000 today. And pretty much all of that, or not all of it, but the lion's share of that coming in one pretty sizable Dees 120, 140, 160 put fly. It went up 3,460 times when we profiled it. Looks like no other volume trickled in on the day, so that was pretty much the sum total of it. And there is some decent open interest on some of these strikes, about 8,600 open on the 140s or the guts portion. The wings, not so much, about 2,500 open on each of those strikes. Went up in a bunch of blocks, all of them marked as spread, and looked like they were essentially just piecemeal little blocks done here or there to try to squeeze this execution into whatever price, whatever level they were working on. Senior Rock Lobster, take us through what caught your eye here in particular.
Exactly. It was a put fly. It stuck out like crazy. It looked like they were buying the fly. I thought for a second there it could have been a closing trade. So it would make no sense to sell, I think, to sell that fly at that level because, you know, we have a really high index skew right now, so that out of the money put is very expensive relative to the at the money. So a trade like this does make pretty good sense. They're basically picking up what I think is some relatively inexpensive protection out till December, or maybe a straight downside spec. So that's what it looks like, and it's a reasonable price considering the kind of protection you get. You know, you're spending $1.92 to make, you know, a bunch of money if the Dow trades 1,400 again. So, you know, again, it's a good downside piece of speculation, but a smarter one.
And just to clarify there, so you're thinking they bought one, sold two, and bought one. That's what you're thinking, right?
That is correct, yes.
Just for our listeners out there who may be confused. Sometimes it gets confusing when you're talking terminology with the flies. What did they do? Where did they open? Where did they close? And you're right, it does on first blush look like it might have been closing because there is a lot of open interest on that 140 strike, which is, of course, 20 handles out of the money, but it doesn't really make a whole heck of a lot of sense to be closing a fly this far out, particularly when you haven't really had the move to capitalize on it. And you're right, Andrew, there is some healthy skew out in that region. All right, moving on to a newcomer here in the old Odd Block. This is AerCap Holidings NV. Ticker symbol AER. This is the name that does just a hair shy of 1,000 contracts a day, doing about 3,600 today. They closed today $45.48. But what we saw in particular out here in the old AER was looking at the ACH expiration cycle. We saw some size call sellers. Looks like some overriders come into play here in AerCap Holdings today to the tune of 3,500. And 19 of the ACH 45 calls going up for $3 even. This is on open interest of nearly 4,000 contracts. Again, first blush, looks like it might be closing because it's almost the exact same volume as the open interest, but it hit the bid at the time. So it looks like this is probably someone piling in with some additional volume on this strike. They probably put up this first 3,000 to 4,000 here and said, hey, I'm getting a decent level, getting a decent rate of return on these. It's about 6% at these current levels. So why don't I tack on an additional 3,500? These calls, of course, 50 cents in the money now, so getting a little bit juicy. But this guy's been doing fairly well in this trade so far, and it looks like he's probably piling on some more. Is that your call as well, Senior Rock Lobster?
Yeah, I thought, the yield looked pretty good this is a company, it's a jet leasing business. They're generally kind of stable. And it's not a bad yield it's like 6% till October. I think a lot of people would be happy for 6% for 4 months, forever. So it looked like it just looks like more of the same, again, marked buy right. So obviously, if he had it the other way and he's taken it off, he would not have done very well if he was short the stock and long the call, because that didn't do so good over the last 3 or 4 months. So it just to me looks like he's putting on more of the same and looking to grab some dollars. Selling that at the money call is not a bad way to generate some money over the long term either. So.
Looking to grab some dollars. I like it. Aren't we all, sir? Aren't we all? And in that ongoing, never-ending quest to grab some dollars, we're going to cast our eyes a little bit further afield to PG&E, actually. I haven't talked about this one in quite some time here on the show. This is ticker symbol, of course, PCG, closing today $47.62, down about 60 cents or 1.2% on the day. This is the name that does about 500 contracts a day, doing a whopping 10,000 and some change today. So pretty sizable volume. And what we saw in particular was what looks like perhaps, dare we say it, talking about alternative strategies going up today, perhaps even a covered strangle. Not too many of those going up in the old odd block, but we saw 5,000 of the SEP 45 puts going up, as well as 5,000 of the SEP 50 calls, all for, it looks like about 55 cents for each, actually, not total, but for each. So about $1.10 total for the strangle. Looks like at first when we were looking at it, we were looking at this, and maybe this was someone putting on a bullish risk reversal. Maybe this was someone putting on a collar. But no, it looks like someone actually coming in, putting on a short covered strangle. That would, of course, listeners, be long stock, selling the call against it, and then selling the put as a bit of an extra kicker for some extra income. Of course, the rub of that being on the downside, if you drop below that strike, you're picking up some more stock. It's an interesting strategy. We haven't really talked about that much here on this show. I know it's one that some groups like the OIC and others have started to really research and study and try to pitch to some advisors and asset managers as a way to perhaps juice up the old covered call that isn't perhaps as sexy these days. Was that your take as well, Senior Rock Lobster? Are we looking at a bona fide covered strangle here?
I'm going to say yes.
We need a buzzer for that. A ding, ding, ding covered strangle.
Exactly. It's the only thing I can say is I remember a guy writing for another online publication used to do these covered strangles a lot, and ultimately you're just short 2 puts. You're short the 45 put, and synthetically you're short the 50 put now with this trade. So it is a bona fide covered strangle. So it works great when the market is not doing much. It works ugly bad when the market is falling apart. It's probably a great trade to do when the Dow is at 8,000, at 16,000. I think it's, ultimately you got to want to own, you got to want to be long. That's what it is. And it does great if you want to do that. So, but that's what it is. I'm going to buy some stock and I'm going to sell more stuff against it, and I want to make more money. So, you're doing it in PG&E. So, if California hasn't managed to bankrupt itself yet, they're probably not going to do it between now and September either. So you should be okay with this. You doing this on a utility. On Amazon, Google, it might be a little stickier.
Yeah, I think you just outlined why there was some initial interest and then hesitancy when they first started researching the covered strangle and putting it out there. Some of the advisors and asset managers, people first were like, wow, I get double the income. Sign me up. Then when you start walking them through, is essentially what you said, you're essentially short 2 puts. That's when they start to back away a little bit and get a little bit more nervous. But then again, this is a position that if you have a name that you like and you have some levels you identified, this could be an interesting way to add that little bit of a kicker to your portfolio that could be lacking right now. Interesting stuff. I think we've devoted some time to this on the old Options Bootcamp show, listeners. So check it out if you want more information there on the old covered Strangle. Meanwhile, we're going to roll on into our final name here in the old odd block. This is, actually, I don't think we've talked about this one before on the show. Six Flags, ticker symbol 6, SIX, closing today, $42.31. This is the name that does about 600 contracts and some change, so not exactly an options beast from a volume perspective, but doing some numbers today, doing about 7,000 contracts. And looks like what we saw here, it's funny, after all this cool stuff, we were talking about covered strangles and all this other fun stuff, put flies, things we don't usually get in the old odd block. We're going to wrap it up with kind of the same old, pretty much an up roll, no out this time, just up. We saw the SEP 3540 call spread going up for about 420 here. 3,300 times when we wrote it up, a total of about 3,400 or so going up on the day on these two strikes. Again, on open interest of 3,490 on the SEP 35s and pretty much 500 on the SEP 40s. Looking like someone who's had a decent run on the old SEP 35s and decided to take those off the table and roll on up to the SEP 40s. Again, no out. He's not rolling out to December or January. He's keeping it all in the same expiration month, which I guess in and of itself makes this trade a little bit unusual. But just the old standard roll-up. Senior Rock Lobster, take us home with this call roll here in Six Flags.
I've never quite understood rolling to the same month.
Yeah, I don't get that either. I really don't. That kind of bothers me.
I mean, I guess they want to take money off the table and say, okay, we can't lose or whatever, which is fine. But you might as well go out like another month. Get some more time for your commission dollars. That's the only thing I thought was a little goofy here. But I believe this is just a guy making some money. Six Flags, I believe, is kind of one of those stocks that's sort of out of the basement, and they're taking their money and they're saying, howdy-do, whoop-de-doo, I'm going to take my money and go. And that's what I think there.
I mean, you usually keep it in the same month when you're premium sensitive, but it's not like he's rolling to a cheap strike. He's still rolling to a $2 and plus change in the money strike. So there's some meat on those bones. So yeah, I don't get the rolling to the same month.
I don't either. Unless I'm totally wrong about they're rolling a long strike, but the way that in the money option traded looked like they were, unwinding a long call and rolling up to and trying to get long another one. So,
all right, good stuff, Mr. Rock Lobster, as usual. But now it's time for us to keep on rolling right on into our next segment. Yes, listeners, it's time for the Viceroy to don his fanciest of fancy caps because it's time for the Xpress Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Express Block. Like I said, this is the portion of the show where the Viceroy takes us behind the scenes into the land known as Options Express by Charles Schwab. Mr. Viceroy, before we dive into all the fun stuff cooking over there at OX, I'm just curious, you've been around the block many times from an educational perspective. You've been over there at the exchanges and the various organizations, and even now at the broker-dealers, pushing a lot of educational initiatives in the option space. Was there ever a time out there when you were out there pushing the covered strangle? And if so, what was the take on it from the could be the buy side community, could be the institutional community, whoever you pushed it out there to? What was the response to the covered strangle?
So there were two communities that embraced it, and in fact, there's a SIBO white paper on it that's still on their site, and they call it the covered combination. And yes, to your point and to Andrew's point, it's just synthetically two puts. But there were portfolio managers, interesting enough, and there were also bond managers. I didn't call in a lot of the bond managers, obviously, because I only briefly had fixed income product. But there were portfolio managers who viewed it as a way to apply their asset allocation. Now, essentially, what the covered combo is it's buy low, sell high, and there were people who would use it to rebalance. So, rebalancing is, let's say you own, 50,000 IBM, you're a portfolio manager, or let's just say you're an individual investor and you own a couple hundred IBM, and your view, look, is, my target to sell it is a 210. So I'm going to sell some 210 calls, and they'll take me out, and I'll get paid to get out at a price I would ordinarily get out at. And if the market goes up, I become overbalanced. I become heavier in stocks. My weighting in stocks goes up. And in fact, that's the environment we've been in lately, where people's weighting in stocks has become uncomfortable, and they want to lighten up a little bit. So obviously one way to lighten up is just to sell stocks. Another way to lighten up is to sell call options. And if you're really desperate to lighten up, you sell in the money call options. But it was the buy low, sell high strategy. And using that IBM example, you say to yourself, well, 210 I'd be out, but if we got a dip and we got into the 160 area again, IBM's high 180s last time I looked, but if we got into the 160 area again, I peel off some of the cash I'm holding and buy more. So it was kind of a buy low, sell high strategy, and it was popular amongst the portfolio managers that had to own stock. So they were generally retirement accounts where they couldn't do things only with options. They had to have some of their portfolio in stocks. But it was also a very popular strategy in terms of bond management and people who were trading tens and longer durations, who A, knew when they had cash coming in, and B, wanted to adjust when interest rates declined and the portfolio became more valuable. So it's kind of a buy low, sell high strategy. And yes, it's two puts, but the psychology is different, and the psychology is especially different. I mean, we sit here and talk about options. Keep in mind, there's some people out there that actually have to own stock. There's some people out there that have restrictions and are limited to what they can do, with stocks, retirement accounts, qualified accounts. Although there are a lot more option strategies you can do in a qualified account today than you could some years ago. There's some people that are just core stockholders, and they use the covered straddle, the covered strangle, the covered combination as a way of managing the stock position. So strategy I've always liked. I get it's just selling two puts, but for many people it isn't, especially those folks who have stock in retirement accounts and want to trade around the stock.
I didn't mean to derail your Xpress Block, sir, but again, I'm also a bit of a fan of the covered strangle. It doesn't get a lot of love out there, so when it comes up natively, as it did in this case, I feel we have to take the ball and run with it. But go ahead now. The floor is yours. What else is cooking over there in the land of OX by Charles Schwab?
So very quick Xpress Block. We've already talked about the names that were active today, but what else is going on here at OX? I know this is a little bit of a reiteration, but for those OX customers that are fans of the IdeaHub, we're going to be adding names to the IdeaHub. We've introduced IdeaHub for futures options. Right now, it's just four symbols, the crude, the gold, the E-mini, and the NASDAQ. I'm going to begin webinars on IdeaHub for futures options on Wednesday, probably doing one of those a week. And we'll be putting up webinars for the conventional IdeaHub and talking about some of those new names. So a lot going on the hub side here at OX.
Hubside might be a title for a new segment of the show. I like it. Coming up on Hubside. I like that. But now, of course, listeners, it's time for us to keep on rolling. He teased it at the top of the show. It's finally time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block. You know what time it is. It's time for Uncle Mike Tosaw to come on down from the mountains known as RCM Wealth Advisors. Smoking jacket, bubble pipe, and stone tablets in hand to dispense some options, wit, and wisdom. Uncle Mike, you did tease at the top of the show. Now, everyone's been waiting the entire show. They can't wait any longer. Put them out of their misery. The floor is yours, sir.
I don't know. Maybe we should wait till next week. Should we just do that?
All right, we can do it. We'll table it till next week. Check back next week, listeners, when Uncle Mike will finally pull the curtain back on his mystical strategy.
I couldn't do that to the audience. They've been so good to us through the years, Mark. Let's just do it now. What do you think?
Just this once.
Okay. All right. A few weeks back, I was looking at DDD 3D systems. And I know this is something that hearing me talk about such a stock is probably giving many of you heart failure just because it's such a shocking thing. It kind of shocks me myself. But what we wanted to do is just have some exposure, just something a little bit more, how can I put this, volatile. And didn't really feel a traditional collar was going to be the way to go. And just kind of also felt that volatility was at a lower level. So did a few things with this, and so far so good. It hasn't been a huge profit, but it's definitely been, this is the, how can I put this, the conservative risk tolerance of a 90-year-old's way to do a collar on a stock like this. So step one of what we did, we bought the stock. Now we did this all within a matter of we did this all within a couple orders within a few seconds. So it's not like we looked at it and then legged in or anything like that. We just got in right away. We did as many orders simultaneously as we could. But this was definitely something in the speculative portion of the portfolio. So we got into the stock at $50 a share. And simultaneously we bought not one, and for every 100 shares, we bought not one, but two July 48 calls. Now, with that, for those of you listening at home, you're probably thinking, oh, well, that's just a synthetic straddle. And you're absolutely right. It is. So far, all it is it's a straddle. If you ever want to do a straddle and you don't want to lever yourself, so to speak, another way of doing it is you buy the stock and then you buy two at-the-money puts. And, folks, you have something that's equivalent to a straddle. So that was the first step of this trade. And then after that, what we did is we sold a 50 covered call for out in January. Now, why all the way out to January, you might ask? Stay tuned. There's more. At the same time, we bought a July call for a lesser price. So overall, this trade, it was a small debit beyond the price of the stock, but it was a fairly small debit. Now, the other thing to keep in mind is when you hear someone say, oh, you can do a trade like this for credit. Well, it's not really a credit because your obligation is longer than what your long option is. So, once again, quick review. Long 100 shares of stock, long 2 front month, or actually it was probably about front month and a half, so to speak, long 2 July 48 puts, so that creates a straddle. And then also we did an inverse calendar spread, meaning that instead of a traditional calendar spread where you are buying something further out and then selling something more near term, this time we are buying something more near term and selling something a little bit further out. Now, why are we doing all of this? Well, let's start it off. What if the stock goes up? What if the stock goes down? What if the stock stays sideways? Well, let's say that the stock royally tanks and the stock were to go to 30 over the course of the time frame between the middle of June and July expiration, let's say in theory. Well, we just had a big trade because of the fact that we create a synthetic straddle, meaning that since we own 2 puts to our 100 shares of stock, that is how we would profit on the trade. And that call spread, that inverse calendar call spread, or short call spread, whatever way you want to view it, or whatever way you want to talk, whatever way you want to say it, whatever you want to call it, the two would essentially cancel each other out because of the fact that yes, we did sell more premium, or we did sell premium for a time further out. However, there was a lot more of it on the table. So by getting a very large move to the downside, the two would cancel each other out, and likely I actually have a small profit on the table. Now, let's talk about, should the stock go up to $55. It's up at $57 right now, but we got out of it today at $55. Now, 10% was our target of what we were looking to get on this. If that's the case, then you're going to get your butt kicked on those 48 puts. Stock goes up, puts are going to go down in value. In this case, the price of the July 50 call increased at a rate more rapid than the January 50 call. So not only did we have the stock working in our favor, we also had that inverse call calendar spread working in our favor as well. It created positive delta. We had gamma on our side, so to speak, and that gave us another little kicker to the trade. Now, it didn't quite make up for the loss that we took on the 48 puts, but nonetheless, it was something nice to have. So that is something to where if you're getting a large bit of movement in the underlying, a calendar spread set up the opposite way can be of benefit to you. Now, I've told you all the wonderful things about the trade, what can happen if it goes up, what can happen if it goes down. Let's talk about your enemy. What is your enemy on this trade? Your enemy is if you don't get enough movement on the trade. So if you're going to do something like this, whether it's a straddle, whether it's an inverse calendar spread, whatever the case may be, if you're going to do something along those lines, then you have to understand what you're fighting against. And we had a stop loss in place. I hate to call it a mental stop loss, but it's more of a time stop loss to where if we didn't get a $5 movement up or down, we made an evaluation last week saying, well, we looked at the prices of everything last week, and we were still slightly ahead by like a nickel on the trade when the stock was at the 53.5 level. So we decided, okay, well, we're still ahead. We're going to stay in another day, and we're going to continue to make the decision every day as to whether we should stay in or not. So we stayed in another day, and it worked out for us. If the stock stays the same, you're going to get your butt kicked, to put it bluntly. The value of those puts are going to go down, and they're going to expire worthless should you do nothing between now and expiration. And should you get out of them before expiration, they're likely just going to be at a much lesser value. The value of that long call that we bought for July is going to lose a lot in value. So with that being said, the way with which to think about a trade like this is if you're looking at something that you have a lot of movement potential on, something like 3D systems, then that is something with which you would consider it on. Also, let's look at this from a volatility standpoint. We haven't even gotten into that as of yet. We're long Vega on this trade. And if you believe that implied volatility is going to go down, then this is probably not the best strategy for you to take a look at. Now, by implied volatility, I'm referring to the options themselves. So, with that being said, if you can stare at your computer screen, as I like to do, if you can don't have a huge amount of risk tolerance and would never buy a stock like this on its own, like I never would, but still want to have some type of exposure to something along those lines, this is a way with which to consider doing it. The key point to this is that no matter what trade you do, there's always a friend and there's always an enemy to any type of trade you do as an option trader, stock trader, futures trader, or bubblegum card trader for that matter. And make sure that you know your enemy. In this case, we're long a lot of premium, and in this environment, I felt comfortable doing it. So we knew what our enemy was, and our enemy was time, and we would have gotten out had it not moved enough in time. And that is the trade of the day.
Before we go really quick, I let everyone else pontificate on the coverage strangle. Seems to be the theme of the day. But if you'd like your chance to pontificate on the coverage strangle as well, do you ever use it, or do you eschew that 2x downside put there?
No, I wouldn't. I don't have a problem with the covered strangle. It's not something that's very common, but it's in terms of doing it. It's in the toolbox, but it's not the. It's not in the top part of it. I got to pull the little thing up. I don't even know what you call it, the little sub toolbox or whatever with the handle on it, and dig a little bit deeper for that tool. If that analogy makes any sense at all.
It doesn't, but I'll allow it.
Okay, very good. You can tell I work with tools a lot because I don't even know what the heck the terms are in the toolbox.
I'm telling you, cover Strangle in 3D systems. It's a marriage made in heaven, sir. There you go.
What more could a man want?
What more indeed? Except perhaps to keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to the Around the Block segment, listeners. This is, of course, the portion of the show where we tell you what we're watching on our screens for the coming week. Perhaps we'll start off in the hinterlands of Maine. He's been quiet for a little while. Let's shake up the old rock lobster. Mr. G, what are you watching for the week to come, sir?
What we are remarking, I think this is the third least active day than in the last 5 years or 10 years or something. Just how long can it last? How long does the market ignore the Iraq, Iran, whatever nexus that seems to be happening over there? Market is ignoring the higher oil prices, pretty much ignoring everything. So I'm curious. I mean, and oil did come off a little bit today, so it's generally only coming off of issues being resolved in the Middle East or being less ugly, I guess. So I think the market is desperately searching for a direction and a reason to get to new highs. And I think we're just kind of in a quiet couple of weeks here. We got non-farm payrolls in 2 weeks. So I don't see a whole lot happening. I think some individual names can move, but I just see, VIX kind of creeping down a little more. I see the volatility products getting smacked a little more. And stocks just kind of hovering around a little bit. I wish I had a little more, but that's kind of all I'm seeing right now.
You got to love it. You just launch a new chat room and the market just shuts down.
Basically, yes. Although we have found it's been a good thing on like technique about, looking at what makes a better type trade or like a butterfly or an iron condor or things of that nature. So in that point of view, it's been helpful. So we've been able to still find a couple things, but yeah, there's definitely just not a tremendous amount of stuff going on. That's for sure.
Gives you more time to pump your Zynga agenda, sir.
Yeah. I don't have no more Zynga position after it stopped going up. I just decided it was time to move on.
The Zynga checks stopped rolling in, so you have moved on, sir. I know how you work. I know how you operate over there. All right. Save us, Uncle Mike, from this den of scum and villainy. What's going on? What are you watching for the week to come over there at RCM Wealth Advisors?
Well, I mean, I was really excited that silver took a 2-penny increase today. I'm just trying not to watch the insides of my eyelids right now. And typically when you're in a market like that, it gets me paranoid because if woe to the complacent is something with which I always say, and we seem to have a complacent market right now, and just concerned as always, but it's kind of like I'm in a similar boat as Andrew in that there's really not a lot to watch at this point, so I'm just hoping that we don't get some type of low-volume squeeze of some sort, but we're ready for it nonetheless.
And Mr. Viceroy, take us home. Give us your macro perspective on the week to come, sir.
I think we are all in the same boat. We're sitting here in these summer doldrums waiting for some catalyst, and I'm not sure if it will be a positive catalyst or a world catalyst. There was some violence between the Israelis and the Syrians today, and as Andrew pointed out, the lugging these things off. At some point, this market either needs to have a catalyst that takes it to higher highs, or one of these macro events is gonna bang us lower. And again, both to Andrew and Mike's point, we're option guys, and we look at volatility and we see a market that's not doing much, and I think it makes us nervous. 25 years ago, we'd be looking at this and saying, yeah, it's summer, nothing's going on. And a lot of these extraneous issues, especially out of the Mideast, they're going to work themselves out. And We got a president who doesn't look like he's going to take us into any of these. And I think the market is liking that. But I would feel so much better if I saw some conviction that we're going to take out the highs. But that's what I'm looking at.
All right, listeners, that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, I will check in with each of my cohorts here on the old All-Star panel, see what they have cooking, what's coming down the pike from them. That may interest you, the listener. Speaking of listeners, Uncle Mike, have you been having some interesting conversations with those listeners who've been taking you up on your offer here on the show, your very generous offer, I might add?
Oh, absolutely. And it's real exciting to talk with people. And one thing I'll say to all the listeners out there, it's great hearing from you. We don't get to hear you on the other side. So we have no idea if anyone's actually listening besides the numbers that Mark Longo tells us. So we love hearing from you all the time. And, feel free to give us a call at any time. And I would be more than happy to chat with anyone. 312-212-3531 or mtosaw@rcmam.com. Would love to chat with anyone.
And Mr. Viceroy, what's coming on the pike over there at OX Education and Live Events?
Just a couple of events coming up. Wednesday, the 25th, IdeaHub for Futures, doing that at 2 p.m. Thursday, Nina's going to do a review of the trading platform and the site. And also on Thursday, Russell Rhodes from the SIBO is going to talk about trading long volatility. And one final comment, Myron Scholes was in town last week, speaking here in Chicago, and he made a real interesting comment. He talked about the fact that over the last 20 years, low volatility stocks have outperformed high volatility stocks, which I found particularly interesting. But as I say always, I am a geek. Plus, it was great to have Myron back in Chicago for a day.
All right, and last but not least, Mr. Rock Lobster, take us home. What's coming on the pike over there in the land of the pit?
Well, we actually have a webinar on the 28th of this month, Saturday, 10 a.m. Eastern time it starts. It'll be like 10 to 12. Principles of Trade and Risk Management webinar to help people manage. Again, using maybe a little dash of Tosaw and a little dash of Alex. Just these are things we teach at Option Pit, but that we believe are kind of universal. Although some people would disagree with us and say, throw caution to the wind and sell those covered straddles. But again, walking people through managing trades and a book of position. So surf on over to www.optionpit.com /events and sign up for our webinar on Saturday.
All right, good stuff as always. And on behalf of the Rock Lobster and Uncle Mike and the Viceroy, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and for subscribing to this program, making it such a hit. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA. The
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.